So now let's build a spreadsheet to find the beta of a portfolio. I'll be using Microsoft's inbuilt stock feature to calculate the beta of a portfolio. So please follow along. I'll also provide a link to the spreadsheet that I'm working on so that you can calculate your own beta of the portfolio. So let's create a hypothetical portfolio comprised of 10 to 12 stocks, and let's calculate the beta of that portfolio. So this is only possible, the stock functionality is only available in the Office 365 version of Microsoft Excel. So I'll pause for a few seconds for you to create the following columns, and then you can follow along to create a spreadsheet that tracks the beta of your portfolio. So let me pause for a few moments. Okay, so first what you have to do is enter the ticker symbol for the stock that you own or you plan to own. So in this case I put Facebook, and I'm assuming that I'll have 130 stocks, or if it's an existing portfolio, enter the number of shares that you have and also the average cost. That's all you need to enter in terms of pre-filling the spreadsheet. Okay, now what you need to do is click on Facebook and go to Data tab on the Excel, and here you'll see a stock symbol. Click on it, and now the API for Excel fetches the data and populates the ticker symbol for you. So also you'll see a small symbol here. That's where you click and you can bring in the actual value for Facebook for all these column headers. So if you want to know the price, you can bring in the price to your spreadsheet, or any of these fields that are available here. So this is a very good tool for people to keep track of their portfolio. So it is not helpful not just in terms of finding the beta, but also if you want to keep track of your portfolio in general, you can use this functionality. But here our scope is limited to beta. So I have 130 stocks, average price of $171.94. So what is going to be the original investment? So we have to multiply that number of stocks with average cost, and we have my original investment. So now we have to bring the current price. That is pretty simple. Click here and press on that small icon, insert data, and then scroll all the way down to the price, and you get the latest price for the Facebook. So this is real data, and whenever you want the refresh data, go up here and click refresh, and the API will run again and fetch the latest data. Okay, now we can calculate the current equity, right? Because the average cost is 171, now the price is 233. To find the average equity, current equity that you have on Facebook, all you have to do is multiply the current price times the number of shares you hold, and you get, okay, each individual calculator, yes, I do. Okay, so we do E2 times B2 and you get $30,000. That's the current equity. Also, you have to find the percentage of the portfolio. That means to calculate beta of the portfolio, what we will be doing is we'll find the percentage of Facebook in the overall portfolio. So if Facebook is 10% of the portfolio, that's what we are trying to calculate here. Then we will bring in the beta of the stock Facebook, and when you multiply it together, you'll get the beta of Facebook in your portfolio. So that makes sense, right? I'll give an example. Let's say you have a million S&P 500 SPY ETF. So as we discussed before, that has a beta of 1. And let's say you have a highly volatile stock, Nothing comes to my mind, but let's say it has a beta of 2, but you only have one of that stock, correct? So you have a million SPY and with a beta of 1, and then you have a crazy stock which has a beta of 2. But since you only have one of that stock, it's not going to really affect the overall beta of your portfolio, right? It's still going to be 1. So that's what we are trying to find out here. Even though Facebook has a beta of 1.19, we know that if you only have 10% of your portfolio in Facebook, well, the beta of Facebook in your personal portfolio is going to be different. So let's calculate. So here, what I have to do is bring in beta. I think it's right here, and it fills in the next free column. But what you have to do is you can do a Control X and just move it over here. So see, this is the equation that they use. So now you have 1.19, which is the beta of Facebook. Now let's fill in this portfolio with different stocks. So I pre-fill this Excel with some stocks that I would like to own. So this is a hypothetical portfolio. So I added Google, Visa, Schlumberger, American Waterworks, JP Morgan, VHT, AT&T, Adobe, Johnson & Johnson, Bank of America, and Ford. And I put some number of shares and average cost. So let's calculate the original investment. Excel makes it easy. You can drag this down and it will pre-populate, or the trick that I used to use is click on this small dot here and it pre-populates for you. And so I have my original investment. So let's do the same here. I click here, double click there, and I get the current price of all these stocks. And let's calculate the equity. We had put the equation here, so all you have to do is double click here and it gets populated. And percentage of the portfolio. So to calculate the percentage of portfolio, first you need to know what's your portfolio now. So for that, select the cell here, go to the home and do the auto sum, and there you got it. This portfolio now is worth $283,600, and my original investment was how much? 260,000. So I have some gains. Good. So let's calculate the portfolio percentage. So I want to find the percentage of Facebook in my portfolio. So F2 divided by overall number, and I get this. So I don't want to see these many decimal places, so let's just go to 3 decimal places. So now before I drag it down or auto populate these fields, let me slightly modify this equation, because our denominator, we have to keep it steady, right? We don't want, when we drag this down, we don't want the denominator to change. So for that, we put the dollar symbol, so that will make sure that the Excel will treat this column as a constant, and the numerator will move accordingly. So now let's calculate how that gets populated. So if you look here, F13 divided by F dollar symbol 14. So I'm not doing the times 100 part to find the percentage, because we want the number in decimals. So I have in this portfolio 10% is Facebook, 17% is Google, 35% is Visa, 0.3% is Schlumberger. Moving along, which is a big number, JP Morgan is 16%, Johnson & Johnson is 6%, Bank of America is only 0.2%. Alright, so beta, you can do the same trick, and now the beta is pre-populated. Now to find the beta of the portfolio, it's pretty simple. put the equal sign, percentage of portfolio times the beta of the individual stock, and we don't need this many decimal places. Let's put 4 decimal places. So the beta of Facebook in my portfolio is 0.12. So as an individual stock, its beta is 1.19, but in my portfolio, when everything's the same, when S&P moves up by 1%, my portfolio, everything else the same, will only move up by 0.12%. And you know how I came to that math, right? Because it only represents 10% of my portfolio. So let's auto-populate all these fields, and I get these following numbers. So when I add all this up, now I'll get the overall beta of my portfolio. So let me auto sum, and the beta of my portfolio. So I don't need these many decimal places here. I only need 2 decimal places. So the beta of my portfolio is 1.04%. So now when S&P moves up by 1%, I know that on average my portfolio will move up by 1.04. So I can call this as a balanced portfolio. Why? Because this is sticking very close with the S&P index, correct? And I can make adjustments as the time progresses. Also, when the market moves down by 1%, now I don't have to be worried that because my, let's say, which is my highest beta stock here, Schlumberger. See, Schlumberger has a beta of 2.13, so I don't have to be worried that when the stock, the S&P 500 moves down by 1%, my overall account is going to go down with it as well. Why? Because though Schlumberger has 2.13 beta, it is only 0.3 no, not 0.3% of my portfolio, so it's not going to affect my portfolio much. So also I can increase the number of Schlumberger, or Schlumberger is a crazy stock. Let's talk about something else. Yeah, we have the perfect one, Facebook. So if I want more return in my portfolio than the S&P index, I can slowly increase the number of Facebook in my portfolio. So I can increase it from 10% as it is now to, let's say, 20%. So my returns will be more. So that's why you cannot use these numbers in isolation. So you have to consider the overall environment of the stock that you're investing in. So you have to look at the news, the things that's happening with the company. Is it moving up, moving down? Is the general consensus of that stock to move up or down? So you have to look at the general trend of that stock. Once you consider all that, I can now increase my percentage of Facebook in my portfolio from 10% to, let's say, 15 or 20%, and this beta of the overall portfolio will increase with it, and I will benefit. I'll get a bigger return than the overall market. So that's all I had for today, folks. Please be safe, wear masks. If you don't like using masks, stay home, and hope you all have a wonderful rest of the day, rest of the week, and keep on rocking. Ciao.